The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials are up 58. You have the NASDAQ up 3. S&Ps are up 6.5. Gold is down to $6.30, trading at $11.77. You get silver off 34 cents at $15.80. The bond market, the 10s are down 13 ticks. The 30s are off up full point. And King Dollar's up 1,130 ticks. At 95.64. If we go over first and we take a look at the S&Ps, folks, you go into those futures, and what you're gonna see inside the futures is this: we're trading right now at 21.19. That is the number, folks. 21.19.25 is the number. That little baby couldn't handle it yesterday. We'll see whether it can handle it today. What we did do is that it got up, it tested, couldn't handle it. The volume dropped off dramatically on the intraday as well as the daily. Thus far, what we have is that the force thus far this morning was up to about 21.18. 21.1875, you had a little juice in it. This number, what the number is all about, is going all the way over to the 18th of June. That is where this needs over 92,000 contracts on a 10-minute. So we'll see if, in fact, someone can drive that baby higher. But thus far, just can't handle it. Inside the Qs, the NDX 100, what you have inside the NDX 100 out here this morning. Well, actually, let's see what is the weakness, because the NDX 100 looks like it wants to get negative. Right now, we're only up 1.9. So putting juice into the NDX 100, you have Citrix is up $1.67, Celgene is up $1.94, Vertex Pharmaceuticals up $1.77, and Facebook is up $1.15. Taken away from it on the way down. Win is leading the charge on the way down. That's down $2.94. That thing is really getting toasted and roasted. Win is taking out a swing low out here today, and let's WY. Let's look at this as we're moving. So Win is going to do another ABC structure on the way down. We're only 10 minutes into the market. 40 minutes into the market. Win already has 245,000 shares and it only needs 819,000 for an ABC structure on the way down. Your A point on this would be the top of that gap, which is the, well, I'll take the bottom of the gap to be the most conservative. So that's 117 to 98. So you got, 19 points. Let's call it, 19 points. That's an ABC structure down to 90 on Win. Disaster, no doubt. I suspect that has all to do about Macau and the amount of corruption money in China that they're scared to spend anymore. They'll come over here and spend it, though, hopefully. Let's see. Western Digital. Western Digital is the second laggard inside the NDX 100. That's down $1.95. NVIDIA is down 44, and Seagate Technology is down 97. Inside the Dow Industrials, the strength versus the weakness, this is what we have inside the Dow. The strength is United Health, that's up 191. IBM is up 196. Verizon is up 38 cents, and JP Morgan Chase is up 51. Taken away from it on the way down, Microsoft is down 23. Procter & Gamble's 36. You get Chevron down 43, and Intel is off 17. The IWM, what is intriguing out here this morning is that the IWM is having a hard time to getting any traction out here. The IWM is over its highs, and the longer that this stays over its highs, then you can really get a leg going. Thus far, we're at 128.80. The high that it launched was 127.13. Now, it launched it with dramatically lighter volume, but the bottom line, it's up there. So we'll see if, in fact, that can stay there. The divergence that we have out here today, as I said a little bit earlier, in between European markets and our markets is considerable. There's no two ways about it. Now, let's go over to King Dollar and take a look at King Dollar. King Dollar has a nice surge going forward today. It's getting price, and intraday, it's had some decent volume. What we've done is this. We're up 1,100 ticks. You have 35,000 contracts. The 35,000, however, is coming into the 12th, where we had 83,000 contracts. So it's going to need a lot more contracts than that. It hasn't budged, off this high out here today. I suspect what we are going to see, though, it is going to budge. The thing that's going to be wild is that, okay, what is going to make this budge? Now, let's go over to the gold contract. What do we have with gold? Gold contract out here today has traded to a low of 1175. We're at 1178.60 right now. We've done 76,000 contracts, and that's dramatically lighter contracts, folks. That's lighter than we're dealing with on the June 5th level. The June 5th level, the high of that is 1178. We close over that. We're going to have lighter volume than that. That's a rejection of price. I suspect what we're going to see, though, is this. Right now, we're at 1178.70. Intraday. Now, watch, I put this up intraday. This is building cause to basically get higher today. So this is going to be interesting watching how it can shake out. Because this is what we had. The first leg down, okay, was a fast leg down this morning. But prior to that leg down, it went up to 1183.70. Well, no, it came down, and then at 0830, it pushed higher. That level there, we had some juice in. We had 5,400 contracts in. Then we made a low, and as we made that low first at 1176 with 5,300 contracts. Then we tested, here's the test, with 3,000. That correlation, so you tested low at lighter volume. Then what did you do? You come off that low, and you had some juice. When we came off that low at 0930, we got up to the 1179.90 and had juice behind the move. What that's saying is that we've been in 40 minutes of building cause right now. I expect that you're going to see a couple surges forward. And what I do expect we're going to see out here is that the currency moves have been fast and furious out here this morning. I expect they're going to continue. I also expect they're going to be reversals. That's what's going on here. So it's going to be really wild watching this thing shake out. If I put the euro up for a second, what you're going to see, and by the way, it makes no sense that the euro would go up, but that's what it wants to do. If we take the euro, we put the euro up for a second, what you're going to see is that the euro came down this morning to 113, well, 111 rather, 111.35. Right now we're at 111.75. That 111 area is going into how it came topside on June 2nd as well as the 5th. So the way that that seems to be setting up right now is that you've had a fast downtrend since 11:20 Eastern Time last night. It basically got stretched, and now we're going to see some counter trend action. It doesn't necessarily have to be counter trend action. It could be flat out action to continue the euro's move topside versus the dollar's move downtown. Now, let's go over and take a look at the silver market. Silver, it's down substantially, meaning percentage-wise. And silver, no doubt, always, it's highly volatile. It's down at 2% right now, when gold is only off 0.4%. If we take a look at the silver market, what you're going to see is that we got into a price point of 1567. We've done 36,000 contracts. We're at 1582, and it just has to close, by the way, folks, just over 1577. That's the bottom line. It's already rejected lows out here. What it's doing is going into a couple different signs of strength. The largest one being let me put this on a daily for you. The largest one being how it came off the bottom on March 18th. The low there was 1549. The high was 1612. I'd love to see it close over 1612. That'd be a mind blower. But that's what it's doing right now. And thus far, it has rejected that lower low. So that was a spike low out here this morning. Spike lows are pretty cool, actually. But we'll see where the whole thing shakes out. If we go take a look at the GLD to see what the correlation is inside gold, and we'll do the same with silver. What we have with the GLD right now is trading at a price point of 113.07. That little baby is down 57 cents, only 1.2 million shares. Yesterday we came down to 5.7. She's coming into the March 18th swing point with dramatically lighter volume. The high of the March 18th swing, folks, is 112.87. We've hit thus far 112.92. The volume is 12.4 million. Yesterday we had an expansion of volume from the prior day, but however, you had lighter volume than how we went up on the 17th last week, and we did 5.7 million. Now, what I'd like to see, is a contraction of even the 5.7 million. Because if we get the contraction from yesterday, and you're going into the 12.4, and you get a rejection of lower price, you get action, man. Because that's showing that, guess what? We have no sellers. If we go take a look at the SLV, what you have with the SLV is that's the Silver Trust. SLV out here this morning is trading at a price point of 15.17. You stay right there back. We'll come right back, folks, and bisect and dissect this SLV. This is Tom O'Brien. This is TFNN. Coming right back.
Larry Pesavento has just announced a new service that is designed specifically for technical traders that follow Fibonacci patterns in many markets and are always on the lookout for profitable trade setups. Larry will be sending his subscribers a constant stream of charts and videos whenever he finds formations and trade setups in the market you need to know about. And each Monday morning you'll receive Larry's written report that provides detailed commentary on the charts and videos that he sent out, as well as what to expect for the week of trading ahead. Larry's first issue will be delivered this coming Monday, and in the days remaining, we're offering a special launch promotion where you can get a full month of Larry's new service, Fibonacci 24/7, for only $47 with a 30-day money-back guarantee. Larry has already started sending out charts and videos to his subscribers that have signed up, so don't delay and sign up now. You can sign up for Larry Pesavento's Fibonacci 24/7 right now by visiting the front page of TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow up 31, Nasdaq is down 5, S&Ps are up 3.5, and inside the Nasdaq is the weakness here. It was going to get really interesting too, because the Nasdaq has been the composite itself has been over these highs. Now we are at 51.49. Back inside 51.19, bottom line, that would be a false break topside. So we'll see how this whole thing does shake out. The NDX continues to be weak out here, and inside the NDX, and that's with a couple of these equities up good, but the ones that are dragging it down much faster than the ones that are bringing it topside. Now let's go over and take a look at the SLV. So the SLV, that is the iShares Silver Trust. That is trading right now at 15.20. Yesterday, the SLV went sideways, with light volume. We did 5 million shares. Today, you're at 2.4 million. Your benchmark on this, folks, goes right to the exact same day. It's March 18th. Now, what's really cool about the SLV is this. That benchmark, see, the gold benchmark, we haven't hit it yet. We're about, 15 cents above it. The SLV has, so it's going to be a true test. The high of that benchmark is 1538. The volume is 10.4 million. So the SLV will have a chance to do the 10.4 million. We've done 2.4. But what happens also with the SLV as well as the GLD is that it's the beginning and the end of the market that the shares come in. If you take a look at what I have up right here, you'll see at the beginning you had 152,000 shares, and then many orders with 15, 10, 10, 10 GLD. And let's go put up the GLD. So you'll see at the very open, that's what ends up happening. Now on the GLD, even though the GLD has a much bigger market cap, you have orders at the beginning, but not as heavy as the Silver Trust. So we'll see how the rest of this day shakes out. What I do expect, though, is that the volatility is going to get really shaky. What was crazy out here this morning, folks, was this: is that the move, the 1,100 tick move in the dollar, is like, man, this is interesting. Okay, because most times if the dollar moves that dramatically, you're going to see force behind the move. And there wasn't force behind the move. And it's almost like, okay, you had the price go, and they could actually get it up that high. So there weren't sellers also. There's not people that were selling it there, no doubt, because they busted higher. As soon as it hit where we actually had 83,000 contracts, though, right? Boom, stopped dead in its tracks. I mean, dead in its tracks. Simultaneously, though, when the dollar was up that high, gold still wasn't below the 1180. And I was looking at that, I'm saying to myself, this is pretty wild, because with the dollar on the move like that, gold, no doubt, should have been down to, you could pick a number. I mean, bottom line, though, it didn't budge. What I did like is how silver spiked and then rejected it. That was a huge heads up that, okay, if they couldn't croak silver. And silver always seems it's much easier to croak in a much larger way. That's just kind of how it trades. And you know, I think it's probably the actual silver contract. I believe the silver contract. I don't like trading silver, by the way, in the futures market. That is, the silver contract. Yeah, the silver contract 7,000, and the volatility inside it can just kill you. That's the real bottom line. The gold contract. I like trading the gold contract, and that's only 4,100. You know, a different number. It seems that the gold contract has spikes, but they're not as dramatic as silver. What ends up happening with silver is, you know, realistically, it just moves too quick. It moves too quick both ways. So, what I do like to do though is what I'm doing right now is looking at that silver contract, saying, "Oh, I like how this is trading," and then going into the gold contract. That makes sense for me, because what ends up happening is that silver actually gives you more information in the marketplace as to what the metals may do. You know, that's how this kind of shakes out. If we go over to the dollar index again, as we're talking, they're selling this off a couple hundred, you know, couple ticks. Nothing heavy yet, but I suspect as the day keeps going on, you know, it's already just given up 200 ticks. We've just gone from 88 to 48. So we've given up, given up 300 ticks thus far. This is Tom O'Brien. This is TFNN. You stay right there, folks. Dow's up 24, Nasdaq's down 8. S&Ps are up 250. We're going to be right back.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's take a look at some of the higher volume stocks in this market. We get Ma Bell. Ma Bell got some action underneath it. That's up $1, trading out of 36.08. You have Apple down 54. Let's see, Rite Aid's up 13 cents. We have American Airlines down 58. Now, let's go. We're going to take a look at the Shanghai market. Watch this. This is intense, folks. Okay, and when we talk price and volume. This, it's so cool because price and volume works anywhere, folks. Any market, anytime, any place. And when you take a look at what Shanghai did last night, so check this out. This is, if you happen to be watching Tiger TV, you can see it. If you're driving in your car, I'll explain it to you. So Shanghai, in the last 3 months, okay, we've gone from 3,000 up to 51.64 in 3 months, okay? You hit a high. Now, it has the highs with light volume. It had volume, however, and decent volume all the way up to the price point of 43.56. Now, 43.56 was the April 20th high. It continues higher, and the first time that the Shanghai gave a signal that, okay, we're getting close to a top, had to do with how we came down on May 28th. May 28th, we went from 49.86, and you came down with volume. The first day was 78 billion. Then the volume contracted dramatically. We got down to the 44.31, and we did 61 billion. Now watch this. That was going into the highs that were generated out here of 76 billion. So it was 61 versus 76. Okay, rejects it. You go higher, and it looks to me like we got a top in Shanghai. Now, don't short it yet, because this is how this is setting up. The mind blower right now, to me, looking at this, that it stopped right where it should have stopped. So your correlation, so we went back topside on the 9th, 10th, 11th, 12th, 13th, 15th rather, up at those highs, all light volume. Now, we came off the high. And we came off the high, folks. We came off the high with light volume. Okay, where's it stop? It stops the last time we had any volume on the top side. So on the 20th of April, which is 4356. It rejected that last night. It ended up 98 points. Now, what you want to watch is this. This is, I suspect, how this is going to shake out. Your correlation would be as it starts moving higher. Your benchmark is going to be where the first time it came down. So you can get a bounce out here, another 400 points on the Shanghai. What you'd be looking for is you'd be looking for 49.86, a rejection of that level with lighter volume. Okay? You get that? Guess what? That's where you can start taking a look at the Yang, which is direction, 300% inverse correlation. This is down 470 right now at $59. Why? Because bottom line, Shanghai was up last night. This goes down, and this is a liquid stock. What does happen with this? These are inverse. These are leveraged ETF structures. Bottom line, don't marry them. But you want to play China? Nice way to play China. If you are a bull out there, you can get into Ying, Y-I-N-N. That was up 355 at 51.44. And both of those, just so you understand how this is going to work also, both of these, folks, they will gap around and they are just going to correspond. They're not going to be trading all day. They're going to mimic the Shanghai. So what ends up happening is this, is that your trade is prior to Shanghai opening. Because when we open, Shanghai's already closed. That ETF structure, whether it's the yin or the yang, okay, will mimic what happened at Shanghai that following night. That's how that thing shakes out. But, you know, I suspect the Shanghai market, we definitely want to keep our eye on, because what you do have, the amount of froth over there is pretty dramatic. The stories are amazing. And the sad part is that there's going to be a lot of people toasted, roasted very quickly. Because what does happen, unfortunately, on the way down in markets, they go down much quicker than they go up. And, you know, it's a problem. There's no two ways about that. Our own S&Ps right now, if we take a look at these S&Ps, we're ready to make the next leg down in the market. I suspect it's going to be happening right now, too. If we take a look at this E-mini, what you're going to see is that your first leg down, so right before we were going on commercial break, someone jammed this thing down 5 S&P points pretty quickly. Right now, we're at 2115. This is building cause, and it's trying to build cause to break that 0850 level this morning. That was you break that 0850 level, you can get some fast action down here, because once you break the actual level on it is 2114. You break the 2114, we're going to be down into the 2098 pretty quickly. The 2098 where I'm going, that was generated out there, let's see, on the 19th. There's nothing holding this, by the way, in between that. There's just nothing there. The market itself has tried to get over the 2119, hasn't been able to handle the 2119, and the canary in the coal mine actually is the NASDAQ composite. The composite, it's like, okay, what's pushing that composite back? That composite just couldn't handle a higher price out here very quickly this morning. So the composite was the first one that was basically saying, hey, this thing wants to go south. You had the small caps follow that up. And the S&P, you know, is basically coming on right now. And I suspect as we go through the marketplace here, this is still really early in the morning. We're dealing with, 1040. You're going to see more expansion on the downside. This leg here, believe it or not, this is what's pretty wild. This leg here is an important one, meaning if you get juice behind this leg, then you'll see some real action. If we just break on price and on a 10-minute bar, you don't really get any heavy juice, then you'll just bounce right back. You know, it'll try it again. But this bar is going to be important. And thus far, you're only a minute into this bar. So the bar itself is going to have a real shot to get some real action going. So we're dealing with a big number, because at the close yesterday, we had. Yeah, you get 48,000 contracts. So we're dealing with a big number here. It can do it, though. We just did 10,000 contracts in a minute. So this absolutely can do it, and we'll see what kind of action we get. The divergence out here, you know, between Europe and us, the last 2 days is pretty dramatic. You know, it's like, okay, they're just holding those markets up, fall grease in themselves. You know, we'll see, but. Awe is, you know, there's I suspect there's plenty of fundamental folks out there that suspect that as we are pulling back on monetary policy. Europe is going to have to go even deeper into monetary policy, and it's real possible that large funds are just saying, hey, listen, I had a nice run in the U.S. I'm going to start taking some bread out of the U.S. I'm going to start pushing it in Europe. We'll see how long that lasts. But what they do have going with them for them right now is that the euro has been going the right way for them, and the market itself has been moving higher. Our own dollar, we have plenty of our own companies that continue to complain about the dollar. The bottom line, folks, is that the dollar, it stopped going up. When we actually take a look at the dollar, it's almost 3 months ago. Yeah, the dollar topped out in March. So that dollar shouldn't be the excuse in the quarters that June, February, March, April, May, June. Yeah, next quarter. That absolutely shouldn't be the excuse. It will be the excuse, I suspect, in some more numbers that are coming out for the first quarter. But next quarter, they'll blame something. They'll blame weather. They'll blame something. Well, there was a story yesterday in the Journal. It was a really good story, and what it was about is this: it was about GAAP earnings versus non-GAAP earnings, and what has happened is that there's a lot of companies, when you hear that, whether it's a 14 PE, 15 PE, whatever that is, well, what has happened is this. Let's picture you have Company A, and Company A gives out lots of stock options, let's say, to the employees, right? And GAAP numbers, they account for those shares, okay? So let's say, I'm going to use a 500 million number because they give out that many, 500 million. So in that aspect, when you're looking at their financials, you're looking at the financials, and that is included because that's diluting everyone else's shares, right? So that's 500 million. Okay, that company either made money or lost money. That's one scenario. The second scenario that the Journal was talking about was this: is that there's so many companies that are reporting non-GAAP earnings, and specifically what that means is that they're claiming they made money, but then they gave out 500 million in options to their employees, including all the executives, right? And then when you're reading those numbers, that's saying, okay, they made money, but guess what? If you actually took out the 500 million, which you have to take out, by the way, because that's an expense, they'd be losing money. Well, that is a heads-up extraordinaire, and that's happening. And when you look at that article, there's many companies that we know, they're monster companies, and the bottom line is that they're getting away with it. And the thing that blows my mind about that is that I'm elated that that's out in the public, but it's like, why that when interviews take place, that's the stuff that reporters should really get their head wrapped around, because that is where the fixed deal comes in. And it's not when I say fixed deal, it's the non-transparency of companies. And to me, that's common sense. What we're talking about here, you can make that in a common sense aspect that, well, why aren't you putting it in there? Let's find out why. They're not putting it in there because why? Because they want to pump up the stock. They pump up the stock, what ends up happening? They get more stock options, they get more bread, they take it out, and they do it over again. That's the name of the game, folks. The name of the game inside this market, unfortunately, is pushing as much paper as fast as you can onto the public at the highest prices you can. Cash out, do it over again. 877-927-6648. Right now, the S&Ps, this little S&P, this is the battle is on right here, baby. We got down to 2113. We're at 2114 at 25 right now. We are at, let's see, you get 5 minutes into it, and we have, it's not going to have, let's see, we're at 25,000 contracts thus far, and we're dealing with, we're dealing with 48,000. So we can have the contract value. We'll see if this 2113 at the end of this 10-minute bar wants to hang down there. It looks like it's going to. You get a little dash up, but the future now has to get back inside 2115 in order to get any traction whatsoever. And the 2115, that was at 0500 this morning. So if we go take a look at the we'll take a look at the SPY, the SPY. If you're just looking at the equity correlations, inside the equity correlations, what we have is that the SPY thus far is, okay, so we did 1.5 million right now, and you're coming into 2.2. So the SPY, the SPY also can do the deal. That's how this is set up right now. If we take a look at the 3 Qs, what we have with the 3 Qs, look at the 3 Qs. The 3 Qs are going to go lower. The 3 Qs are going into their gap, folks. 3 Qs, when we had gapped away yesterday, the bottom of that gap is 110.89. No. The high, 110.70. No, there it is. Sorry. 110.13. Right now, we're at 110.45. 110.13's game. It already got into it, and the 3 Qs did have juice here. When we just come into it downtown, in fact, this is the most juice they've had, and you still got 2 minutes left. Thus far, we've done 770,000 shares, and that little baby wants to get into a lower price. Inside that NDX 100, the weakness still is the gambling stocks. Actually, Western Digital's taken over now. Yeah, Western Digital and NVIDIA. NVIDIA is getting a little juice to the downside. You get the volume with it. NVIDIA's having a tough time. NVIDIA hasn't been able to, NVIDIA hasn't been able to make it over the first downdraft that occurred on March 25th. This is building cause for a much lower price. So, little by little, these equities are moving to lower price. And volume-wise out here, and today, it's going to be interesting seeing how the volume shakes out today. The reason being is that you're pulling back on a subtle basis. If we get a expansion of volume as we pull back on a subtle basis, that's going to be a monster heads up. And thus far, the NASDAQ composite does have volume as it's been moving lower. This is Tom O'Brien. This is TFNN. You stay right there, folks. Be coming right back. Dow is up 20. NASDAQ is down 10. S&Ps are up 1. Gonna be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's go over and take a look at the XLF. Now, the XLF, folks, okay, of course, you get the financials. These babies have been at highs. They are having a hard time handling the last high that was structured out here on the December 29th area, which is a 25.14. The thing that's wild is that now, we've been in this consolidation for almost 5 months right now. The XLF has been trying to take out this particular high since December 29th. Well, actually, it's been up here since the May 19th. It got over it for a couple days, couldn't handle it, and then what it did is that it had a high volume spike. The spike that came in was an option expiration, okay? No, it wasn't. It was the before option expiration. It was a good spike, though. The high of that spike was the 25.31. It hasn't been able to handle that. Now, if in fact we come up with lighter volume than today and the XLF, that would be a huge heads up. The reason being is that the spike had 56 million shares. It tried to take it out with 38 million. Yesterday it tried to take it out with 33 million. You know, right now we're at 6 million. And at 6 million, you actually can do less than yesterday. So what that would be showing is that regardless of rates going up and banks making more money, there's something else that's inside that is saying banks are going to be coming down lower versus going up higher. And that's something you want to keep your eye on today, because it's going to be hard, number one, to do less volume than yesterday. And in fact, if you do, that is a larger heads up, and it's actually the market's releasing more information. And those are the types of things you want to look at, because what I've found is that it's the you don't necessarily are trading those vehicles, but when something is so in front of you and it should go higher, when you look at the context, and it contracts after trying to hit highs on over and over and over again, that's a big heads up. The energy sector, still dead in the water. You know, you got the XLE out here this morning, still can't handle higher price. Dramatically lighter volume, by the way. The XLE right now is flat. You're at 2 million shares. This XLE wants dramatically lower price. If we do take a look at the oil market out here, what you had a surge higher this morning in oil. That looks to me like just a spike. That's about it. There's not much there. Thus far, we've done 163,000 contracts. That 163,000 contracts are coming into 300,000 contracts. We are at 60.98. Oil would have to close under 60.93. That would be the benchmark. You close at 60.98, that would be saying, guess what? You're going to go higher. So right now we're a couple pennies over it. So we'll see where that baby does shake out as we move through the trading day. Dollar index is still hanging up there. That's up 975. NASDAQ is still the component out here that's pretty weak. That NASDAQ right now, the NDX 100 actually is the weakest component out here. Let's go take a look at the WDC and Western Digital. Right now is the leader, bringing this baby lower. So we take a look at the Western Digital. What we have with Western Digital is, I know, the IBB we got to look at. Yeah, Western Digital's doing another ABC down 230. You're breaking the $89 level. It's not going to have volume, but that's getting destroyed. This is Tom O'Brien. This is TFNN. You stay right there, folks. Our man, Mr. Basil Chapman's going to be coming up, growling and prowling with you. Then we have Kevin Hinks from TD Ameritrade Think or Swim. Darryl, Tuesday. No, not Darryl. Darryl won't be on today. Dave White will be coming on. I'll be back later. And our man, Mr. Andy Heck, will be on tonight. Have a great one. Have a safe one, folks. Stay right there. Basil's coming right up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.